Welcome back. We've heard from the Fed in today's statement. What did it tell us about when Ben Bernanke will take the foot off the pedal? We want to get right to our panel to help decipher the clues. Joining me right now, former Dallas Federal Reserve President and CNBC contributor Bob McTeer, Julia Coronado of BNP Paribas joining us as well. Good to see you both. Thanks very much for joining us.
It's a pleasure.
So, Bob, Let me kick it off with you. What did you hear from the Fed today?
Well, I didn't hear a mention of tapering, which I think pushes it out just a little bit. I don't think it's going to happen real soon. It may be announced in September, but the economy is too weak right now, and that was confirmed with the GDP numbers this morning.
Yeah,
we don't have that strengthening yet that's a requirement for the tapering.
So, I mean, is it possible, Bob, that we don't even see the beginning of tapering before Bernanke's term ends?
Yes, I think that's very possible. I think we'll hear some kind of announcement before his term ends, but it may be pushed out beyond his term.
I see. So let me bring in Greg McBride of Bankrate.com to the conversation. Greg, your thoughts on the Fed and whether or not we're going to see interest rates move much higher from here?
I don't think we're going to see that anytime soon, Maria, because just as Bob was saying, we've got a slow growth economy, high unemployment, low inflation. This is not the type of environment where the Fed has to have any type of urgency on dialing back that stimulus. So I think it's as steady as she goes, $85 billion a month, buy themselves some time to see if the economy does pick up a pace as the Fed has suggested it will.
Julia, if that is the way it materializes, how do you want to invest around this?
Well, I think that for interest rates, we're going to be pretty range-bound for a while. We may even see rates drift a little bit lower in the near term if the Fed confirms that, in fact, tapering is getting pushed back. So I think the rapid backup in rates, and they noted mortgage rates in the statement, certainly is a concern to them with an economy that's running at about 1.5% in the first half of the year. So they decided not to take any chances, and what they didn't say spoke volumes. I think tapering in December would be the very earliest they would announce it. And so what that means is it's probably good for the stock market and probably good for interest rates as well.
Yeah, it's interesting, Greg, because you don't think rates are going to go up anytime soon, and yet you still think the Fed will taper sooner rather than later.
More like later rather than sooner. I mean, I don't think it's going to happen in September. I mean, I don't see how they can. We've in this economic backdrop. I think they'll talk about it more in September, but I think, again, December's the earliest, maybe not till 2014. I mean, with GDP growth sub 2%, not the type of backdrop where the Fed can feel comfortable starting to pull back on the stimulus.
So Bob McTeer, let's say this does happen in 2014. Who do you think is at the wheel? Who will be the next Fed chairman?
Well, the easy bet would be Janet Yellen. And I suppose because they floated the trial balloon that the next in line would be Larry Summers. Either one of those would be a good choice, I think, for the president.
What would be the difference, you think, in their policy? I mean, Larry Summers, I think, is highly regarded on Wall Street as being very smart. Is his policy going to be different? Because he did complain and criticize staying with QE for as long as the Fed has. Do you think his policies will be different than Janet Yellen?
I don't think he could have very different policies at first. I think in order to get the job, he's going to have to make a wink and a nod toward an easy exit from quantitative easing. I think they both would be very cautious in moving away from it. I do think, though, that he's more likely to move away from it sooner than Janet Yellen is. She's been there all along when it was devised, and she's more committed to it, and she's more part of the Fed infrastructure now.
Right. This is part of her baby.
That's right.
The quantitative easing. Greg, what do you think? You agree with that?
Yeah, it's Janet Yellen's job to lose. She's been Bernanke's co-pilot the whole time. I think it's very easy for her to slide over into the big chair at the end of January, and with minimal disruption to financial markets. I think there's some concern about Summers just because, yes, he's knowledgeable, yes, he has great experience, but he has come out against QE, so I think there's some concern in the markets that could produce volatility. He's also been a bit of a verbal loose cannon, so that baggage, I think, stands in the way as well.
And he's also worked for the Clinton administration, worked for the Obama administration. Does he create some politics around? I mean, the Fed's supposed to be independent.
Very possibly.
That's something that's been talked about. Julia, any thoughts on this? Next Fed chairman.
I agree that Yellen is the easy choice and the best choice. She's got the Fed experience. She's got the quantitative easing experience. So it seems like a no-brainer. I think, Obama has a great loyalty to Summers, and he likes him and he trusts him. But I think the track record and the baggage that come along with that are too problematic. And why not take the opportunity to nominate the first female Fed chair?
Yeah, that's interesting. Is there an investing strategy, Julia, that you are undertaking right now ahead of a change in policy? I know you said earlier that it's probably going to happen later, not sooner.
In terms of the tapering coming into effect?
Yeah.
I think for now, again, it's steady as she goes. I think we're going to be pretty range-bound, and the continued QE is supportive. I think the economy needs it. I think that's why the Fed's going to keep the foot on the gas for now. I think once we get closer to the tapering, we're going to have to be more cautious and look for maybe a backup move to a higher range in rates, and spread products might get hurt a little bit when we get closer to that point as well.
All right, we will leave it there. Thanks, everyone. Really appreciate your time today. We will keep watching that, of course, a new era at the Fed.